Hey guys! Welcome to today's video. My name is John and I'm going to be your trader for today. So we just had a CPI release, well, a few hours ago. It was freaking bearish, you know. The forecast was like 6.2, I think, and we got like 6.4, guys. Like so it was pretty bad, but we still managed to go up. Like let me take a look at the stock market first. Or we're going to look at Bitcoin, all right? So this was when the CPI, oh shit, this was when the CPI got released. The scandal, I think it was a scandal. Yeah, it was a scandal. It got released and we went down a bit, but then look at this, man. Look at this. We went up. Why is that? Why is that? The forecast was 6.2 and we got 6.4, man. That's bearish, right? Well, well, we went up. We went up 3.7%. Yeah, we went up 3.7%. Why is that? Probably because your mom and your uncle and everybody and all of the retail traders were selling slash shorting, so we got squeezed. Yeah, I think it's the case, right? S&P went up a bit as well, so freaking amazing, right? We went up. So let's find out if this trend can continue any higher. Let's take a look at the long-term view of Bitcoin's price action. And guys, on this channel, I'm going to cover all of the fundamental topics. You're going to see what I mean by fundamental in a second. So I'm going to do charting on TradingView hardly ever. You're gonna see why. So we had range, then we had another range, and then we had another range. Okay, we're just going to look at these three things and define support and resistance, right? So we went up, then we were ranging for a while, and then we went down. So what's our resistance now? Take a guess. Well, we were ranging for a fucking long time. I mean, like days. How many days? It was so long. And then we broke down the range. Really strong resistance is this whole range here. This bottom of the range. This is where a lot of open interest took place. Meaning a lot of selling when we will get there. When we will get here. Yeah, because a lot of longs are underwater, right? You're longing, you're longing this bottom because, support is your trend until the end. And you were longing the support, but then we broke down the support, right? You're in long. Let's say that you're in long here. I'm going to give you a bit of theory. You're in long here, and then you're underwater, and you're scared because you have a lot of money in that long, and then you're going to reach this zone again. So what are you going to do with this long? When you're getting rid of long, you're selling. So you're going to sell. So a lot of these are going to sell and sell and sell and sell and sell and sell and sell. We're gonna have a hard freaking time breaking to the upside. That's just the way it is. So if you want to exit long positions now, I would exit here. This is very strong resistance. So that kind of answers a question that no one asked, but I came up with it. So we're going to define this trend. We're going to look at this trend as a whole, and we're going to let me remove drawings. Yeah. Let's take a look at this whole trend and let's see if this is just a short-term thing that's going to fall soon, or is this a strong, long-lasting trend? I'm going to show you with two indicators, guys. All right, let's take a look at this. You can see these two indicators on crypto Twitter a lot, on CoinAlyze specifically. It's called CVD, guys. This is just how strong the market buys or the market sells are. It's basically market sells, market buys delta. So showing how strong are the, sells and buys. Yeah, that was just uh, very brief summary. Yeah, you can see these two guys on Twitter a lot, but those jerks on Twitters are misinterpreting those informations a lot, a lot, a lot. They are not using it the right way, in my opinion. I'm going to tell you why, and I'm going to tell you what the fuck this means. All right. Spat. What's spat? Define spat. Spat. When your mom wants to buy Bitcoin, she's gonna buy spat. When your uncle buys Bitcoin, he's gonna buy spat. When a big institution is going to buy Bitcoin, they're going to buy spat. In most cases, 99%. So why am I telling you this? Well, your mom institution and your freaking uncle is going to hold that position for a long time. So when he buys, he's not going to sell like 2 minutes after this or 2 hours after this, or he's probably not going to, because he bought long term. He believes in this. But when you, as a trader, buy derivative positions such as perpetual or future or some coin margin contract, um, you're not going to hold it for a long time, probably. Just, just you may be a day trader, or I don't know what you may be, but you're not going to hold it for that long time. Just that leverage and everything. It's just not. There's not that. You're not going to do it. Come on, you know from your own experience. So why am I telling you this? When a trend is driven by spot, these are long-term positions. It's strong. When a trend is driven by perps, derivatives, futures, it's short-term and it's going to reverse in most cases, or it's going to be manipulation probably. So, what drives this trend? Let's take a look at this. So, spot and derivatives, keep that in mind. You can remember, orange spot, blue derivative. I'm going to disable the text. Here's how I look at this. This is trend. You cannot argue with me. This is trend. And then what drove the trend? So spot, it went up, but just a little bit, you know, to this point, right? It went up, but just a little bit. But take a look at it was that, spot was that. Take a look at derivative position, speculation, perps, futures, whatever the fuck you're trading. It went up. It went up a lot. There's a divergence. And even if we zoom in onto some small levels, where is it, guys? Thin eye, very thin eye analysis here. Perpetual is going up. What spot's doing here? Freaking hell. It's going down just a little bit. But things like these, it's what drives the trend. So there was just an example. All right, and let's take a look at the present price action. All right, what do we see? Anything new? Are there still divergences? Huh? Well, take a look at this. Spot selling the trend. We went up and the spot is selling. What drove the trend? Derivatives. Still here. From this point to this point, there's still this divergence. So this means, if you kind of look at this abstractly, this means that this whole thing, kind of from this whole structure, is just driven by short-term positions. So something is telling me that this is probably just manipulation, and we may look further down like this, but there's big but, guys. Let's take a look at this. I'm going to tell you a freaking secret. You're gonna be grateful after watching this video. How the do we gauge if we are in bull market or in bear market? This is probably the most misinterpreted thing in the whole history of markets. So, do you want to have some rule book of a bull market / bear market by retail traders or by Wall Street big guys, professionals? Well, I don't care what you said, but who drives the market? big guys, not you as a small guy. The guys on Wall Street. And how do they tell the Goldman Sachs slash ex Lehman Brothers? How do they tell whether something is in bull market or in bear market? Guess what? They just take the top, go 20% down to this line, draw a horizontal line like this. And guess what? Below, bear market. Up here, above, a bull market. It's that simple, you know? And you might be saying now, I don't believe you motherfucker, what you're saying now. Well, guess what, guys? I encourage you to write email to a hedge fund manager that you may know, to some Wall Street guys, and ask them if this is really the case. And guess what? They are going to tell you the same things I did. 20% down, bear market, and then from that point, when the 20% move occurred, above that, that's a bull market. That's how the big guys on Wall Street see it. You know, please don't believe me, right? It's your thing, not my problem. But we are in bull market. No comments. We are in bull market. Sorry if this may be toxic, but you have to keep this in mind. If don't agree with me, but this is how the big guys on Wall Street do it. So S&P in bull market, Bitcoin bearish, macro data pretty good, I would say. Oh, not as bad. So what's the final conclusion? Well, the final conclusion is that Bitcoin is not ready yet. And if you don't agree with me, let's take a look at mini futures of S&P on the new price scale. There's a big freaking divergence in here, right? Okay, guys. I think this explained the whole thing. So, final conclusion, stock market bullish. Bitcoin is not ready yet. That's the final conclusion, guys, all right? I'm not in short, I'm not in long, I'm waiting. That's just the way it is. All right, guys, hope you learned anything new. Leave a like, leave a subscribe, and until the next video, bye-bye.